Good morning or good afternoon, everyone, depending on where you are joining us from. Welcome to this FM InFocus webinar support for March 2026 exams. My name is Richa and I work as Education Support Manager at ACCA. Our session today is focused on Examiner's Report Unlocked, and it will provide an in depth exploration of essential exam support resources, especially Examiner's Report and Read the Mind of the Marker articles. You will also get practical exam technique tips and an opportunity to ask your questions live. Rashad Hussain has joined us today to deliver this informative session, drawing on his experience to provide any valuable insights and a deeper understanding of the subject. Rashad comes from a rich teaching background and he has been an educator, mentor, and consultant for over a decade and specializes particularly in FM and AFM papers. He has guided and nurtured numerous candidates to rank holders, and he is also CFO at FinScript Business Consultants Limited. You can always access the detailed profile in speaker's bio section of your webinar page. So before I hand things over to Rashad, I would quickly run through few housekeeping items. At the bottom of your screen, you will find a number of buttons you can use. For example, slide and media player icon, which you must select because you will need to view both of them throughout the webinar. Use the chat function to engage with fellow participants, and please avoid sharing any personal information in those chats. Look for the icon that resembles like a file. Clicking on this, you will get access to helpful exam materials related to today's session, your exam, that includes direct links as well. Feel free to move things around your screen and resize the windows however you like. And if you cannot hear us or the visuals disappear in between, for example, then just try refreshing your browser. So by registering for this session, you will get an email tomorrow with all the details on how to watch this session again. So don't worry in case you miss anything or run into any technical issues, you will be able to catch up later with the recording. So I am now going to hand over to Rashad in a moment and will be back with you towards the end of the session. In the meantime, if you want to ask ACCA or Rashad a question, please post them in Q&A box. So just a quick note that we may not be able to respond to everyone individually, whether through chat or verbally, but we will try our best to share the question and answers that are helpful to everyone. So handing over to you, Rashad, sir.
Thank you very much, Richa. Welcome, everyone. Great to be here with all of you. Indeed, good morning, good afternoon, good evening, depending on where you're joining from. We have attendees across the globe. Welcome you all on board FM Financial Management. I'm Rashad Hussain, and I've been around ACCA for quite some time. I mainly teach FM and AFM, and here the approach is very simple. Every student learns differently. Some learn by practice, some by revision, and some by crying. They're all valid methods. So we are here to create a learning environment that supports everyone. Keep things conceptual, clear, keep us laughing enough to survive the syllabus. So what are we doing today? Nothing scary. First, we'll be looking at the examiner's report. So what do we have? We'll be looking at the examiner's report, examiner's insight, from which we learn about the common pitfalls. And we'll also be going through something called RTMM. What is this RTMM? Read the mind of the marker, where we'll be going through how the marking process is done, what happens in the mind of a marker. So and finally we'll be closing with before the live Q&A, we'll be closing with the practical exam techniques. So here, let's get back to the examiner's insight and common pitfalls. So here we're going to share the real observation from the marking process. We're going to look at the candidate, their strength. What are the strengths that they showed? What are the weakness that led to most of them losing marks? Now, let's have a look at one of the questions. Here I load it across. So this question is a question on the topic of interest rate forwards, where Apollo company needs $10 million 9-month loan in 3 months time and buys a 3 to 12 FRA 4.6 is to 4.1 percentage in 3 months time. Apollo company borrows $10 million at a rate of 4.5 percentage. What will be the amount or what will be the payment or receipt under the FRA for Apollo company? So we have got four options. Now, this is a case of forward rate agreement where they plan to take a loan in 3 months' time from now 3 months and intend to repay within a duration of 3 minus 2, 12, 9 months. The duration is 9 months. In such a case, the rate, that is when you're taking loan, 4.6 is the loan percentage and 4.1 is the deposit percentage. We are taking a loan, so the relevant rate tends to be 4.6 percentage. After 3 months, the actual rate, after 3 months, the actual rate or the market rate is 4.5. The interest that we'll be paying on the underlying loan will be paid at, what is it, 4.5 percentage. So that's going to be, how much is it, 10 million into 4.10 million into 4.5 percentage into 9 divided by 12. So this will be the interest on the underlying loan, interest on underlying loan. But we had in fact agreed for how much? 4.6. So here the company, that is the Apollo pays the financial institution how much? That is 10 million into 4.6 minus 4.5 percentage into 9 divided by 12. So the calculations, which is 10 million into 4.5 percentage into 9 divided by 12, will give me how much? 337,500. And here it is 10 million into 0.1 percentage into 9 divided by 12. It gives me 7,500. So the right answer is 7,500. Apollo is paying, it is payment. So the answer tends to be A. Now, what are the most commonly made mistake here? Most commonly made mistake here is, number one, candidates, they do not consider 9 divided by 12 in most of these cases. They take it, they ignore this part, the one that is rounded. And when you ignore that part, you end to get up the answer as 10,000. So many cases, the wrong answer that is selected by candidates is realizing that instead of taking for what is not 1 year, the period is 9 months. This is mistake one. This is mistake one. Now, mistake number two is understanding whether it is a case of a payment or receipt. So here we agreed for 4.6. The actual rate was lower. Under FRA, the rate, that commitment is obligation. Whether the rate increases or reduces, we only have to pay a net of, what is it, 4.6. So the balance 0.1 percentage is a payment. It is not a case of receipt. So this is question number one. This is question number one here. And the next major thing is in the topic called working capitals, working capital strategy. As far as working capital is concerned, there are various approaches of working capital, various approaches with regard to the funding of working capital. Now, if we take out the assets or the current assets, we've got two parts. Or rather, if we pick out the assets, I can say assets, we have got non-current assets and we have got current asset. This current asset can be further categorized as what is it? The permanent current asset, and what is it? The fluctuating current asset. And we have got three types of funding. Well, the one approach of funding is the moderate. We've got conservative, and we have got what is it? Aggressive. Moderate, conservative, aggressive. Now, if we don't have a proper understanding of it, the next question I want you to read, try solving that question. I'm going to be looking forward for its, the response. There are two companies here, Kane and Abel. You need to tell me whether Kane's approach is aggressive or is it matching or conservative. Abel's, you're supposed to tell me whether it is aggressive, matching, or conservative. So I'm looking forward for your response in the chat. Yep. What do you think is supposed to be the answer? Kane, go through the scenario, read the scenario there, and let me know whether the Keynes is aggressive, matching, or conservative. And Abel's, is it aggressive, matching, or conservative? Yep. Good, good. Responses are coming up. Okay, now let's get back and try to understand the concept a little bit more. See, moderate is a policy of maturity matching. In moderate, for non-current asset, we've always got to go for long-term funding. Permanent is also supposed to be done as per long-term funding. But fluctuating is done by short-term funding. Conservative, we are very careful about not taking any risk. So almost everything is funded by what is it? Long-term. And aggressive, we are trying to do too much with very little long-term working capital. There is very little funding. Sufficient funding is not there. Where most of the funding is done through short-term funding. Even the permanent current asset, which needs to be funded by long-term, in aggressive, it is funded by short-term. So once you know this concept, applying this concept properly is what we have in the question. So here, erasing the ink on the screen. So the question here is to identify which type of working capital funding strategy each company is using. And the common mistakes what we see is that candidates, they did not identify permanent versus the fluctuating. They did not have knowledge in that. And they were not able to compare whether what is given long-term is, long-term finance is associated with minimum working capital or the maximum working capital. They were not able to compare that up. They were not able to associate the long-term with the minimum working capital as given in that question there. So the examiner's comment, what was the comment? That most of the candidates failed to identify the type of working capital funding strategy. This was the observation. This was the examiner's report observation with regard to this. With regard to this question, the two companies, Kane and Abel, have the following average level of working capital. Kane's working capital is financed by 17 million long-term debt. What is the long-term minimum? Here it is 17 long-term. Abel's working capital is financed by 18 million. Yeah, 18 minimum is 18 million long term. So this one, Abel's seems to be, what is it? a matching one. And Keynes is slightly extra. It is Keynes is slightly more. So Keynes seems to be, they only 15 was required. They've done 17, which means it is a conservative one, which means it is a conservative one. So Keynes, a conservative one. So which one? Keynes, a conservative one. Abel's is a matching policy. The balance of finances from the short-term sources. Click on identifying on the relevant boxes in the table which type of working capital funding strategy each company is employing, whether it is aggressive, matching, or conservative. So here we've associated the minimum working capital has what is it? The permanent current asset. That permanent current asset is supposed to be funded with long term. Now moving on to the next one. Here this question, the requirement is to find out the earnings per share. Now, what is given here? Let's have a look. Remy is a listed company. Its ordinary shares have a nominal value of zero point 0.5 per share and a total nominal value of $30 million. The following data applies to Remy company. Latest total ordinary share is $3 million. Earnings yield is 12%. Dividend yield is 4%. What is the earnings per share of Remy company? We have got four options. I'm looking forward for your responses in the chat. In the attendee chat. Yes. Take your calculators. The first thing what you've got to do is write down the formula for earnings yield, dividend yield. Look at what we are going to be focusing it. You can write those formulas in per share mode. Probably to help you a little bit. The earnings yield is equal to EPS divided by MPS, and the dividend yield is equal to DPS divided by MPS, market price per share. Now, hurry up. And total dividend is given. From total dividend, I am planning to find out DPS, which is 3 million divided by not 30. So what is the number of shares? The number of shares is equal to 30 million divided by 0.50, which will give me 60 million. So 3 divided by 60. How much do you get? $0.05. $0.05 per share. Come on, substitute that and try solving. I have given you the maximum clue for you to reach the answer. Good, good. Waiting few more answers in the attendee chat. Waiting for few more responses in the attendee chat. Okay, so where can I start? I can substitute this over here, and 4% is equal to 0.05 divided by market price. I can find out the market price. Market price is equal to 0.05 divided by 4%. Will give me $1.25, 1.25. Okay, so here I substitute the earnings yield is 12% is equal to the EPS is what we need to find out divided by the market price, which is substituted 1.25. So So the EPS is equal to 1.25 into 12 percentage, which will give me $0.15 per share, and that tends to be the third option. That tends to be the third option. Now, what happens? One of the very frequently made mistakes is that mistake number one. First mistake is that they take the number of shares as 30 million. What is the correct one? The correct one is 60 million. So this is one of the most frequently made mistakes. And at that point you go wrong in the point of number of shares, everything else also goes wrong. The formula of dividend yield and earnings yield is also another point where mistakes are generally happening. Now, with regard to dividend, another very commonly seen, especially in the topic of dividend growth model, where we have, let's say, we are finding out KE is equal to D0 into 1 plus G whole divided by P0 plus G. This P0, what we take, this P0 is supposed to be without dividend, or technically speaking, what is it called? Ex dividend. In case the share price is come dividend, what should we do? Come dividend is, let's say, 100, and less dividend, let's say maybe the dividend is 5. I should take 95, which is the share price X dividend. I should not take 100 here. I'm supposed to take, what is it, 95 here. So this is one very commonly made. And candidates, when they read the question, they do not realize that what information given is come, and we need to convert it into X. So this extract from that past exam question goes like this: dividend of $0.6 or 60 cents per share is expected to be paid in the near future, which means the share price there is going to be what it is going to become. The share price that is there is going to be come. Common mistake: candidates value the share prices X dividend, omitting, that is the come, they consider the come as X. Omitting the current dividend included in the share price, they did not remove it off. And what was the examiner's comment in the examiner's report? The examiner's comment is that some students failed to recognize the current share price as a come dividend share price, and they missed to reduce the dividend from it to arrive at the X dividend. And take care not to use come dividend anywhere in the calculation. The entire syllabus requires you to calculate everything only X dividend and not come dividend. Now, in the topic of working capital, especially when you calculate percentages, and when it comes to, let's say, maybe the topic of early settlement in receivables, working capital, receivable management, we have got early settlement. Let's have a look at the extract from the question. The extract from the question goes like this: 70% of customers take 1.25 percentage early settlement discount on annual credit sales of 45 million. I need you to calculate and tell me how much is that discount, how much is the discount amount. I need you to calculate and tell me how much is the discount amount. What is the total discount which we are going to give in the early settlement? Good. Yeah, I'm looking for that amount in the attendee chat. Great. Now, what happens is that how much is the credit sales? 45 million into 1.25, 45 million into 1.25 will give you how much is it? Dollar 562,500 is the discount is wrong. Why is it wrong? So this is one of the mistakes that is done by many candidates. Why is it wrong? It's wrong because 45 million only 70 percentage. It's 70 percentage. You should take 1.25 percentage. So 45 million into 70 percentage into 1.25, and the right discount tends to be 393,750. The right discount tends to be 393,750. So the most commonly made mistake is that it is applied to the what is it, trade receivable balance, and it is not applied to the 70 percentage, and they take 100 percentage of the credit sales. Hmm. So what was the examiner's comment on this? Most common error was to apply the discount to the trade receivables. It was applied to the entire trade receivables, and it was not applied to just the exact, what is it, percentage of people who went for the early settlement. So this was one of the mistake which was observed in section C. Now, one other mistake in section C was, candidates have to be very careful by the word. There are two words such as, what is it, buy and to. Let's have a look at one such example. Okay, this again section C, misreading deductions as far as bad debts, especially in the area called factoring, where you try to identify what was the bad debt initially and what was the bad debt later on. So the extract was like this: bad debt would be expected to fall by, what is it, 225,000 per year. Let's assume the existing bad debt is 100,000. Okay, not 100,000. Let's say maybe 1 million. It's dollar 1 million. Tell me how much the proposed bad debt is supposed to be. With this sentence, I need you to tell me what is the proposed bad debt. What is the proposed bad debt? If the existing bad debt is 1 million, with this sentence here, which is the extract from the question, come on, tell me what is the proposed bad debt. In many cases, what happens is that the candidates, the proposed bad debts, they take it as 225,000. No, it is not proposed. It does not fall to. It is not to. It is falls by, which means from 100,000, I will less 225,000. I will less 225,000. From 1 million, I will less 225,000 to get how much? 775,000. This is the correct proposed. So what happens is that they get confused with regard to what is falling to. Falling to is different by falling by. So results in, what is it, exaggerated benefits at times. So the examiner's comment is this: once again emphasizes the need to read the information carefully, and please remember, fall to is different from fall by. I repeat, fall to is different from fall by. So this is something very important that you need to take care of. There are several times that many candidates, majority of the candidates, they make mistake when it comes to this particular part, where they pick up the wrong thing, the wrong calculation. Instead of reducing 225,000, they take the proposed as 225,000. Now, the general examiner's insight, we can see that one of the most important thing is that, they don't read the questions carefully, the wrong interpretation of the question, especially, about what the question is asking. Is the question asking to maybe comment, or is it to explain, or is it to discuss, or is it to advise? So very poor interpretation when it comes to, and most of the cases, not every part of the answer is answered, only a few part of it, of the answer is answered. Not every requirement or every aspect of the requirement is answered. Then whenever the comments are written, we see that the comments are quite generic. They do not give, they do not connect the comment towards the scenario. There is weak application towards the scenario. It's a very generic explanation. No reference is given to the company or the data. So this is one very important thing as far as the insight is concerned. Now, the last probably thing maybe to mention about the examiner's insight is the calculations are sometimes incomplete or incorrect. The steps are not shown properly. Sometimes the step is done in paper and only the final answer is put. You've got to put your working, you're supposed to show your steps. And it is not just sometimes they fail to, the calculation is done, calculation is correct, but the interpreting part of it, the last interpreting part, interpreting the results is not properly done. The comments like the NPV is positive, then what has to be done doesn't comes up. And the overall the common pitfalls when we discuss is that candidates they don't answer to what is asked. When a calculation is asked, they go more into the comments, and when comments is asked, more time is given on the calculation. When dividend policy theory is asked, they write about probably about the capital structure theory. They don't stick on to what is asked. And some candidates have a feeling is that what they know, they try to write more, too much, they go into it. And what they know very well, they repeat the point there and here to make the examiner feel that, yeah, we have a lot of volume there. See, the mark is not given for the volume. So please avoid any unnecessarily detail. Don't repeat. Don't stick on 1 point. 1 mark is, what is it? One idea. One idea is 1 mark. What is one idea? One idea is a point, with explanation. Explanation means 2 to 3 lines, not beyond that. For 1 mark, you cannot go too long, where you write maybe 2, 3 paragraphs, not required. And at times where you need to explain things, discuss things, especially where discuss, see, there are certain things when they ask you to explain, discuss, critically discuss, that is, you cannot use short sentence there, you need to go more detail. So listing of short points and bullet points where the examiner cannot give you marks at all. So listing short points when discussion was required, no justification or no further explanation. So to sum up, the verbs that are used in the question, especially identify, describe, comment. Okay, short sentence is fine. But when it comes to explain, discuss, and critically discuss, please remember more detail is required. You need to go more in depth to handle such things. Understanding the marker and mark allocation. Now, there is something called RTMM. What is RTMM? Reading the mind of the marker. What is it? Reading the mind of the marker. And this is going to take you inside the examiner's mind, what the examiner is thinking, how he would think. So when you understand the marker's thinking, FM stops to be a guessing game. You begin to recognize which points attract mark, how much depth is required, how to structure an answer so that your knowledge actually converts into marks. So here we have a question here, and this question is from the read the mind of the marker. It's called Pelta Company. What is it? It's called Pelta Company. On this Pelta Company, I'm just refreshing the screen. Reloading the screen. Okay. Now this Pelta Company here, there are a couple of requirements. What are the requirements? It's a 20-mark question. In that 20-mark question, we've got NPV for 9 marks, discounted payback period for 2 marks, and then discussion of financial acceptability of the investment project, which is for 3 marks, and critically discuss the view of the directors on Pelta Company's investment appraisal. Now we're going to go through how the marker, how the marker is going to think, what is going to run through the marker's mind. Let's understand a couple of things from this extract from this question. So here at one part, the year 4 sales volume is expected to continue into the foreseeable future is mentioned in the question. But the view of the director is that we are only evaluating for 4 years of operation. So the NPV that we need to draft is for 4 years, not four onwards to infinity, not four onwards to the foreseeable future. And the examiner also assumes that there's a terminal value at the end of the fourth year, which is 5%. And he says that both NPV and discounted payback period must be used within a maximum of discounted payback period should not be more than 2 years. They have given that after tax cost of capital is 7% and the nominal is 12. Based on which the candidate is written, this is a candidate, let's say one candidate once solution. How is the marking supposed to be done by the marker? This portion, the one in the red has gone wrong, the calculation has gone wrong, the inflation has gone wrong. So that particular calculation of year one has only gone wrong. Instead of giving full mark here, for this step that is yellow in color, you're only given half a mark over here. Now, because of that red one, are you going to lose marks in your subsequent steps? No. Why not? Why you will not lose? Because there is a rule called OFR. What is OFR? Own figure rule. As per own figure rule, based on this, the subsequent steps shall be recomputed and you will not lose. The second variable cost was given a full 2 marks. Contribution calculation was actually not necessary here. So there was no marking for this. There was no marking for this. This was an unnecessary step. The fixed cost information was given in the question. Again, there is no marking because this was the same thing. How it was given in the question was given similar to this. So again, it is only something that is taken from the question, something that you take from the question and rewrite the same thing. There is no mark for this. It is not a mistake, but there is no mark for these two. And here, profit before tax was wrong. It was not profit before tax. It was operating cash flows. It was cash flows rather. So it was wrongly termed here. So hence we are giving this only half a mark here. This tax calculation, even though based on this one went wrong, but otherwise both of these tax calculation with regard to the tax at 30% and tax allowable depreciation benefit, both of these steps, the one I will use a different color, okay. The one that I am highlighting in green in color, this seems to be fully right, for which the examiner 2 for this and 2 for this was awarded. The capital expenditure was correct. Again, PAT went wrong. It was supposed to be cash flow after tax. Okay. Here, this 1250, this was not given, this was no marking. Why no marking? Because it was information given in the question. This was a computation done for which we were supposed to give 1 mark, but 1 mark is not given, half mark is only given. Why? This figure was supposed to come over here. It was a wrong timing was done. Wrong timing was done. Now, if you go back, the discount factor, the normal rate is 12%. Yes, the exact normal rate is used. So now, as far as marking is concerned, one thing to understand is that own figure rule, if you go wrong somewhere, only you lose only marks for that particular step. You do not lose mark for the entire thing. Second thing to note is that, second very important thing to note is that there are taking the thing from the same question and rewriting, there are places where there are no marking. When you restate the thing from the same question without any further adjustment or things, you do not fetch marks. And to take care about terming things, cash flows not to be termed as profit, and taking the appropriate discount factor. What discount factor? After inflation, the discount factor that is supposed to be used is nothing but the nominal rate. So these are some of the lessons, or these are some of the insights that you really need to understand from the marker's perspective. From the marker's perspective, you need to understand the marks are not given for the volume or the effort or the length. There are rewarding steps, rewardable points. Marks are given for those rewarding points. Points are supposed to be clear, relevant, and linked to the requirement. Why are marks lost? See, improper working for this particular NPV, you could have done a lot of workings as well. So improper working, repeating points in different words, the same thing, where you try to elaborate unnecessarily. Very generic, and application is not given to the scenario at all. Poor explanation for the calculation, comments are not detailed enough. Discuss areas that are not asked for the requirement. Discussing areas that are not part of the requirement. Now, as far as the exam techniques and tips are concerned, understand there are no negative marking. There are no negative marking. So attempt all the MCQs. Do not compromise. Do not leave anything unattempted. And as you start the exam, understand everybody might feel tense. They might feel worried, and it's natural to get worried, get tensed. So how do you handle your stress at that point of time? Try to solve that is easy for you. Focus on that easy mark. Whatever is easy first for you, complete that. So easy mark strategy. The first, I would always say, the first 30 minutes, in the first 30 minutes, finish off section A. Next, that is, you're only doing the easy one. You read, it's easy, you do it. You read it, you feel it tough, you probably read it once more, you feel it tough, skip it, flag it, keep moving it. We will come back to the difficult one at the later point of time when you're more calm and when you've got that feeling, yes, I've attempted all the easy one. Next 30 minutes, you finish off the section B. Then you've got C, question 1, 30 minutes. Section C, question 2, another 30 minutes. You have used only 2 hours. You have 1 hour balance. In that 1 hour, go do the difficult questions first. So in that 40 minutes, you do the difficult ones. And the most important thing is 15 minutes recheck all your answers. And the last 5 minutes, please ensure everything is attempted, everything is marked. And like how we discussed, we've got this thing called own figure rule. Entire marks are not for the final answer. And remember the concept that one idea is 1 mark. It is quality and not quantity. It is quality and not quantity. And this thing, which I am again emphasizing, the last 15 minutes is the most important thing. Keep 10 to 15 minutes for review. That's very important part of it. Now, how is that easy mark supposed to be? 15 marks first, 15 questions, 30 minutes. Next 15 questions, that is 3 case questions, each 5 mark objective, 30 minutes. Section C, 2 constructed, first 30 minutes, another 30. You'll be left with 60 minutes. In that, reattempt the difficult one, which is 40 minutes. Recheck your final answers in 15 minutes. And the last 5 is to go attempt all the unattempted ones. Now, be very careful in the exam not to waste your time doing the, you're very confident means don't repeat those things, that don't elaborate unnecessarily. Stick on to what is required, stick on to the requirement. And well, we've got a lot of questions come up in the Q&A. Let's Richa, let's have a look into the Q&A, picking up the questions from the Q&A. Okay. Okay, one of the questions from the candidate is, does the length of the answer matter or is it just the point? Well, that is something I've already discussed. It's about basically one idea is 1 mark. What is one idea? One idea is a well explained point. So how can you present it? It's, probably in certain places you can probably, go for a, what do you call it, a subheading, a small heading, and below that you can put it across in 2 or 3 lines, not beyond that. Now the next question is, Okay, what is the right technique to perform the question? Is there any order or is there any sequence? There is no such sequence. I would always recommend you to do the easy ones first. And it's not necessary that you start from A or C, but generally speaking, in order to check time and get control, there are many times where candidates spend a lot of time on C and they don't get sufficient time on A and B. So it is highly recommended, like how I showed you on the screen. Easy ones, finish it off. You feel that you can do it really quick, finish that off at the initial one stages. I'm looking forward for the questions in the yeah, you can put across your questions, your queries in the chat box. Okay, solving and how to practice the factoring. Yeah, how to practice the factoring question. See, the concept of factoring is the one that is linked to early settlement. So, in fact, many candidates they get confused when factoring comes in exam. They get confused factoring with the early settlement and extension of credit policy. So always ensure your early settlement and extension of credit policies you've properly learned it, you've properly gone through it, and then start going through factoring. And factoring, when you solve, always try to do the approach where you try to calculate the total cost of factoring versus the total cost of in-house. When you do, there are two methods to do it. When you do the incremental approach, we see that many candidates go wrong when the incremental approach is done by the students. Picking up the next question, in section A, where asked 2 mark, then I get 1 mark. No, for section A, there is no partial marking. Either it is, see, let's say you are supposed to select two out of maybe six items. You select one correct and the other one wrong. You do not get partial 1 mark. It is either zero or a two. Two or zero. There's no partial 1 mark for section A or section B. The focus on areas that are, see, we cannot say that now one of the queries, do you have any recommendation or what is the important chapter? As such, there was one point of time in ACCA where we did not have the objective exams at all. At that point of time, we could tell you what was more important, what was less important. Now, these days with MCQs, every nook and corner of the exam of the syllabus is examined. You cannot do selective preparation. Selective preparation is only preparing to fail the exam. So learn through, start off with the kit, ensure you start going through the study hub very properly, you use all the resources and keep practicing more MCQs as far as possible. Okay, now next question. When doing the inflation with specific rates for sales, etc., does it need to be the power of the number of years? For example, inflation of one. Yeah, see, certain cases the power will be the year itself. There are certain other cases where the power is not the year. Maybe first year there will not be inflation. Inflation will be the second year. So second year, when you calculate the inflation, it will only be to the power of one. So it is not always necessary that the inflation is the respective year. It can be different figure as well. Any other, picking up the Q&A? Again, the same question: what is important, what is not important? There is no selective preparation. Yeah, do we need any assumed knowledge from the previous subject? Yes, FM has an assumed knowledge from the previous paper called MA, Management Accounting, and from the MA paper, there is this chapter called Methods of Project Appraisal. Probably, if you want to refer, that is one chapter that you could refer for the, as your base content for FM. Do you have any tips for revision? Ensure you go through the entire of the study hub, do the questions in the study hub, focus on the past exam questions. Always ensure you do at least one mock before exam. ACCA's only official resource as of now is the study hub. This one is a calculation. Yeah, when you round off to thousands or millions, there might be a very small difference in your answer. That small difference in the answer is acceptable. You are not going to lose any marks for it. When you round off into thousands and millions, you might see difference in your answer when you do it in full decimals, but that is absolutely fine. Picking up the next question, sir. Okay, what is the reason of failing? See, there are so many reasons we could elaborate, but if I speak about the a couple of important mistakes. Number one, lack of practice is one reason of failing. Number two, easy marks is not done. You spend a lot of time on the difficult one. You end up not completing what you know. Next one, there is no practice at all. You don't type and practice. It's not just you're not auditing something. You need to type and draft your answers and practice. And when you do not do easy marks strategy, what happens is that it leads to poor time management. And poor time management will ultimately end up what? Not completing. And when you don't complete, the chances of failing, you would have most probably not done the things that you know very properly, which leads you to, yep, fail. Yeah, can you explain expected values now without a figure over here? Expected values are where the cash flows are considered against the probability. Expected values are when probability is incorporated into the syllabus. So when the cash flows are multiplied with the probability, what outcome we get, we call it as the expected cash flow. Expected cash flow when discounted will give us the expected NPV. So probability comes up, we call it the expected. One question for redeemable, the question goes like this: for redeemable loan note at nominal value, do we use the technique of irredeemable loan note formula to find out KE? How do we use this technique? Now please remember, redeemable loan note, we try to find out the, what do we try to find out the IRR of the cash flows. What are the IRR of the cash flows? IRR of the cash flows such as, in year zero is our initial investment. 1 to n years there will be interest, and we'll take the interest post tax. Nth year we'll be taking the redemption value. So I repeat, initial investment, interest, redemption value, these cash flows at their respective year, we find out IRR. That IRR is going to be the cost of redeemable debt. If you have to explain ratios, do you have to show your working? The workings are not supposed to be done on the paper. The workings are supposed to be done on the cell. So you can you can do the calculations in the cell itself. So what calculation you do in the cell will be visible to the marker. Next question, can we use the IRR and NPV formula in Excel? Yes, the IRR and NPV formula is absolutely permitted to be done. You should not waste your time calculating IRR. You should use the IRR shortcut. The marking weightage for the IRR, unlike the previous where you had to do it in the manual steps, now the marking weight is lesser. So it is always recommended only to use the IRR formula tool. Okay, what are the techniques on answering relevant cost questions? See, relevant cost question is a question is a topic that is actually brought up from the MA syllabus, which is a base paper, which has got base paper. So many candidates, when they are highly recommended to go through that base paper knowledge, where you try to understand the difference between, what do you call it, the relevant and the irrelevant cash flows. They are not that complicated. So once you have that base correct, such as what is historical cost, is it relevant, research cost, is it relevant, the incremental cost, is it relevant, future cash flows, is it relevant, relevant and irrelevant, you can probably go there and get a better, you can go through the base to fix it up. There is no other way. Understanding all those costs will be necessary as far as what you have asked is the answering technique. Next one. Yeah, I believe this question, I'm again repeating it. This question is, the main problem here is when I solve from the study hub, I get the answer to be incorrect. For example, in million, I get 4.566, and then I write 4.6. It shows incorrect. please do not worry about it. In whenever the options are given in the exam, whenever the options come in exam, we've got very clear guidelines where we ensure that such topics, we ensure it is highly recommended. It'll be, they'll tell you round off with decimals or without decimals, round off to hundreds or thousands. So that will be always be taken care of. Such errors or such confusion will not be there on the main exam. Okay. So there'll be always instruction whether to round it off or not round it off. Well, that's it. All the queries. Yeah, I've got all the queries. Yes.
Thank you,
Yes,
sir.
Richa, there
Thank you
was
so much. Yeah. So I
initially I think
understand,
there was
yes.
a glitch. Later on, I
Yeah, yeah.
hope it went smooth. Yeah.
Yeah. Later on, it went smooth. When we switched off the video, at times it's all bandwidth that really creates a problem at times. But it was great. Thank you so much for your support on this webinar. And before we close the session or wrap up the session, I would just like to remind all these students about the important exam resources which we have, especially the platforms like ACCA Practice Platform, where now you have your mocks available, which are live from last Friday itself, and they will be there until the last date of your exam. And then the next are the mock exam debriefs. So they will be available on ACCA Study Resources YouTube channel. So I know you are already fond of this YouTube channel, but please do remember to watch the debriefs of the mocks on them, which will be released on 13th of February. And then we have talked a lot, and there are students who have queried a lot that whether the study material in the study hub will be sufficient, practice tests they have to do or not. So yes, study hub is the hub of all the important exam resources, from the chapters up to the quizzes, questions, practice questions, and other than that, the practice platform. So everything you should look into, you should use for your exam preparations. So with this, I would like to say thank you very much to all of you, especially Rashad sir, and also to all the students who are there today with us, and also the team who is at the back end helping us in delivering this session successfully today. So wish you all the very best for your exam preparations, and finally your exam uptake for March 2026 session. Thank you, everyone.